Hello learners, in the previous video we had done some 2 marks and 3 marks questions, important question from excess demand and deficient demand. Now we will be doing 5 marks questions from excess demand and deficient demand. These are very important questions, and I'll be sharing all these questions as well as answers in the description section. You can see there. If you face any problem, then you can write in the comment box, and please share the link of this channel to your friends also, so that they can also get benefit of these videos. And if you face any problem regarding language also, you can also write in comment box, so that I can make new videos with English language also. So students, I'll be sharing a document so that you will be able to see the questions and answers as well, and I'll be explaining them. So I hope that you are understanding very well. I am getting feedback from some students through phone calls also, but I would love if you will write in the comment section. It will be very nice for me. Yes, this next question is explain all the changes that will take place in economy when aggregate demand is not equal to aggregate supply. Means when there will be no equilibrium. If there is no equilibrium, see, they have written the answer in very short. You don't have to write in such a such answer, because you have to write many words. You at least you should write 150 words for 5 marks question, and you should also make a graph also. So here they have only given the hint that there are 2 situations which can happen when aggregate demand is not equal to aggregate supply. The 2 situations are either aggregate supply will be more than aggregate demand will be more than aggregate supply, or aggregate demand will be less than aggregate supply. So in this situation, when aggregate demand is more than aggregate supply, this means that there will be inflation. And in the case of inflation, the goods and services will become costlier, and then there will be more demand and the supply will be less, the stock will be less, and people will be ready to buy more and more. In second case, aggregate demand is less than aggregate supply. It will be deficient demand, or it will be deflation or deflationary gap. And due to this, what will happen? There will be more demand. There will be less demand as compared to supply. There will be less demand as compared to supply. I repeat it again because I had, by mistake, I had spoken that. So aggregate demand will be less and the goods will not be sold. And when goods will not be sold, the producer will stop producing goods. They will start they'll start removing their production units. They will stop producing the goods. They will be discouraged to produce more. This will happen. Now, next question is given, explain the meaning of underemployment. Now, what is underemployment? We say underemployment when we have less people working, okay, and we are unable to fully utilize their capacity. If we are not able to utilize their capacity, then we can say that it is underemployment. Now, what happens is, in an economy when AS is equal to AD and S is equal to I, this means there is fuller utilization of resources. So this is the situation of full employment. How many people are willing to work are working? So 100% people who are willing to work are working, and we are able to take full benefit of their working capacity, their potential. But in second case, it is happening, and in underemployment case, it is happening that we are unable to utilize their potential. So when there will be underemployment, in that case, what will happen is that demand will be less and supply will be more. In that case, when demand is less, the central bank will decrease the bank rate and will try to increase the demand. People can buy, people can take loans, and they can buy things. And then there will be open market operation. Open market operation means when central bank will help in selling the securities, and it will government will sell its securities, and common people can also buy, and they will be able to invest more. Now see the next question. It is given, explain the concept of deficient demand in macroeconomics. Also explain the role of bank rate in correcting. What you can do to correct bank rate. Means what will you do to improve the bank rate? There is a situation in economy when aggregate demand is less than aggregate supply. Okay, there is a situation. So what will happen is that there will be corresponding means full employment level. Even if there is full employment level, even if the employment is whether it is utilized or not utilized, and there is deficient demand, then what will happen that there will be deflationary gap as demand will be less than supply. Okay, so this is also happening. So this graph you should know and you should be able to explain clearly. Next is explain the concept of deflationary gap. What is deflationary gap? And how does, like they are asking that how does the role of marginal requirement helps in reducing it? What is marginal requirement? Actually, when we go for taking loan, then we have to have some marginal amount with us, and we should have certain kind of securities so that we can take loan. So this is decided by RBI that what should be the marginal requirement, whether it is 15% of the loan or whether it is 20% of the loan. So when marginal requirement is increased, in that case, the demand of loan will become less. When marginal requirement will be increased, then people will not have so much and they will not take loan. But if marginal requirement is decreased, then people will have that amount and they will be taking loan. So for solving the problem of deflation, in deflation, what is happening? The demand is less and supply is more. In that case, they will decrease the marginal requirement. And in case of inflation, when demand is more and supply is less, in that case, because demand is more, people are taking more loan, then what the RBI will do, it will increase the marginal requirement. So role of marginal requirement is very important in the inflation as well as deflation. So you should remember, you can remember like this also: inflation, increase in marginal requirement. There is in and in inflation, increase in marginal requirement. When there is inflation, there is increase in cash reserve ratio also. When there is inflation, there is increase in the statutory liquidity ratio also. So you can remember in this form. And when there is deflation, there is decrease in the marginal requirement. When there is deflation, there is decrease in the cash reserve ratio. When there is deflation, there is decrease in the statutory liquidity ratio. So like this, you can remember. This is the easy method of remembering. Then what is bank rate? Bank rate is that interest rate at which the central bank takes interest from the banks. So it is taking interest because the banks are also taking money from the central bank, and the central bank is taking interest from the banks. So this is known as bank rate, and interest rate is that rate from which when bank is lending money to the common people and it is taking interest from the common people. So if bank rate increases, then the interest rate on loans also increases. When repo rate increases, then also the interest on bank rate or interest rate also increases. And role of more open market, because open market operation I have already explained to you that open market operations are when government or RBI helps in selling the securities. This is done to increase the circulation of credit in the economy. If they need to increase the flow of money in the economy, they will start open market operation. But if they want to restrict it, there is a condition of inflation, they want to restrict it, they will not do this. And then again the question is bank rate, and this you do not need. And then you have to explain the concept of inflationary gap. You can explain as you have explained in 3 marks question, it is enough. But then they are asking explain the role of legal reserves in reducing. Now when we say legal reserves, then we'll discuss this, because we have in legal reserves, we have cash reserve ratio, we have statutory liquidity ratio. Okay, so cash reserve ratio is that part of cash which a bank has to keep with RBI, and it cannot give that part in the loan. So that is compulsory with the bank, that when people are depositing money with the bank, then bank has to keep certain amount with RBI, that is known as cash reserve ratio. So when there is inflation, the cash reserve ratio will increase. When there will be deflation, cash reserve ratio will decrease. And why this is done? Because when we increase cash reserve ratio, bank is unable to give more loans to the common people. So in inflation, we require that. And when there is situation of deflation, then cash reserve ratio is decreased so that bank will be able to give more loans to the common people, and this is required. Statutory liquidity ratio is the fixed amount or fixed portion of the deposit which bank has to invest in securities or liquid assets. Means they have to buy liquid assets like gold or securities, and they have to invest in that. Because I have already told you that bank is a financial institution which works by itself. It is self-dependent type of institution. Only the thing is that bank is an organization which has a guardian, and the name of guardian is RBI. So RBI is just focusing on helping it, and RBI is also checking whether they are doing everything according to the rules and regulation made by RBI. So statutory liquidity ratio is also fixed by RBI only, and RBI decides that what portion of the total deposits have to be invested in liquid assets as well as securities. So when bank invests that money, then banks also gets earning through it, and that earning is necessary for meeting the expenses of bank, because bank also has expenses. Bank also has expenses. When bank is taking deposit, bank is giving loan, bank is also acting as an agent, bank is also advising people to invest in certain kind of things. Now bank is just like a business organization also. It is providing insurance policies also, and it is providing locker facility also. It is providing many kind of, so bank also needs money for meeting its expenses, and these expenses are met by such kind of investment which bank is making, and the bank is earning from the from these kind of investment. So students, you must understand two things, main two things are there, that there can be only two situations in economy. Either there will be equilibrium, aggregate demand will be equal to aggregate supply, or there will be disequilibrium when aggregate demand is not equal to aggregate supply. When aggregate demand is not equal to aggregate supply, there will be again two situations, inflation and deflation. In inflation, aggregate demand will be more than aggregate supply. In deflation, aggregate demand will be less than aggregate supply. When aggregate demand is more than aggregate supply, we called it excess demand. When aggregate demand is less than aggregate supply, we call it deficient demand. And all the legal reserves, when aggregate demand is more than aggregate supply, means it is inflation. At that time, we increase these legal ratios like CRR, SLR. But in other case, when aggregate demand is less than aggregate supply, in that case, when there is deficient demand, there is deflation, and we decrease all the legal reserves like SLR and CRR. I hope that you have understood it. If you have not understood any point, please write in the comment box, send a message to me. I'll be repeating it again. If you have any problem of language also, you can discuss it through comment box, or you can write to me. If you get any question which you are unable to solve, or you are facing problem in that question, you can send it to me through my email. My email is given on my YouTube channel only. And second thing is that please share this link to other students also, so that they can get benefit of these questions. These are very important concepts for your second term CBSE exam. Go through them properly. I'll be sharing them in description section. So thanks a lot, and keep learning economics. Enjoy learning economics. Thanks.